Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Well, hello there. Welcome to the classroom. This is the College Investor Audio Show. Today, Analyzing and Trading Stocks and ETFs 101. Please open your textbooks to page 1. Don't. Especially if you're like driving and listening to this. Anyway, this is just a fundamental analysis of analyzing and trading stocks and ETFs. All right, here we go. Trading stocks and ETFs can be very rewarding, first of all, but it does take a lot of time to identify potential opportunities, entries, exits, and not to mention good risk management. A successful trade starts way before opening a position. We're going to group analysis into two areas, fundamental and technical. Stay with me. You'll find traders who prefer one over the other religiously. Some traders think you can't mix these two types of analysis together. However, there isn't any rule or particular reason the two can't complement each other. Is that a hot take from the College Investor Audio Show? Maybe. Because that's what we're going to do today in this podcast. Go over fundamental and technical analysis to identify potential stock and ETF trades. First of all, let's talk about fundamental analysis. Analyzing a company's financials, place within its industry, management, and competitive advantage all fall under fundamental analysis. It's both quantitative and qualitative analysis. Just like technical analysis, it's a very large area. You can spend days analyzing just one company. So, where do you start? This really depends on what you're trying to accomplish. Are you looking for a stock that will go up very fast? Are you interested in startups or biotech? Or maybe you just want a stable stock with good dividends? Let's look at the latter. A stable stock that pays a dividend and has some potential for appreciation. Stable means a good track record, because otherwise, how do you know if it's stable? That rules out startups. Stable means non-volatile, and that also rules out biotechs, pharmaceuticals, and certain tech stocks. We are likely going to be looking for larger companies with a fairly large market cap. Market cap, by the way, is the number of shares outstanding multiplied by the stock's price. Over $50 billion in market cap and at least a $100 stock price are good minimums. I did say minimum. 50 billion, geez. There's a way to search for these on Yahoo that's very easy. We have a quick step-by-step at thecollegeinvestor.com. It's too confusing to do in the podcast setting, so just go to thecollegeinvestor.com and search for this article. Some of the stocks that you'll see in this large cap are going to be stuff like Lockheed Martin Corporation, Target, FedEx, the companies that have been around for a long time and have good, solid management. Beta. If you click on Target, by the way, when you do this search, it will bring you to the stocks page. You can see the stock pays a dividend. It has a beta, 5Y monthly, of 1.0. Beta is a measure of a stock's price movement compared to the S&P 500. Less than 1.0 means the stock moves less than the S&P 500. Greater than 1.0 means the stock is more volatile than the S&P 500. So, 1.0 means the stock moves about the same as the S&P 500. We're looking for stability. A beta of 1.0 is about the max we'd want, although less than 1.0 is a little bit more desirable. You can further verify the beta by using another source. FinViz shows a beta of 0.99, matching that of Yahoo Finance. Okay, moving on. And sorry if this gets a little confusing, but there are lots of numbers coming up. You can see this article again by just typing in Analyzing and Trading Stocks 101 at thecollegeinvestor.com. Now let's look at PE ratio. TGT, Target, has a PE ratio, TTM, of 23.03. That means a trailing 12-month price to earnings of 23.03. A high PE ratio can mean the stock is overvalued or expensive. A low PE means the stock might be a good bargain. Is 23.03 a good PE for Target? Well, to find that answer, we need to know Target's historical PE and compare it to the retail industry's PE. When we do that by using something called macro trends, again, we have links at thecollegeinvestor.com, we actually see that TGT, or Target, is undervalued compared to its industry. But when you look a little bit deeper, you do actually see that Target is overvalued because their stock price has gone down and up, with their historical high in 2014 being a PE of 21.34. And then it fell really low and began to rise again. But since the end of 2019, both the PE and the stock price have been rising. So Target is basically at an all-time high right now, and a little bit overvalued. So since we know that both the PE and stock price are at new highs, all-time highs don't represent a good value. By definition, you're paying the highest price the company has ever been. Not the best time to invest in Target at the moment, but if you have shares in TGT, it's likely a good time to sell and capture some profits. Okay, if that wasn't confusing enough, let's take a look at some more numbers. Financial analysis. Another area we can spend days and days and days on, but remember, this is 101, so just a few minutes will suffice for today. Now, an individual investor, being able to quickly look at a company's financials and assess its financial health, is a valuable skill. We're going to provide you with just a few tools for some quick analysis, so below are some key values for FinViz, for TGT, Target, to include in your analysis, along with some questions for you to ponder. So the profit margin is 4.30%. How does this compare to its industry peers, would be the question to ask. Income, $3.82 billion. The company is profitable. A quick ratio, 0.40. Greater than 1 means more assets than liabilities. Should we be concerned? How does this compare to TGT's industry peers? Fundamental analysis is important in determining a company's financial and competitive strength. It can be used in the same way for ETFs. Look, we've only scratched the surface in today's podcast, and your head might be about to explode because of all the numbers. You still need to analyze the company's management, industry trends, financial trends for the company, and major competitors. However, the more you become involved and practice fundamental analysis, the better you will get at it. Practice makes perfect, as they say. If you want to find the links and find out how you can dig and dive a little bit deeper into all of this stuff, it's amazing the world of opportunity it opens for you when you dig into this stuff. Find it at thecollegeinvestor.com. Just type in the search bar, Analyzing and Trading Stocks 101. You'll find it. Thanks so much for stopping by today, and we'll talk to you again real soon.